All right, guys, welcome to the video. Anthony here, Special Analysis. Hope everyone's having a wonderful day. Want to dive into kind of the way we talked our way through this crude oil sell-off. We had Fed Chair Powell speaking at 9:30, JOLTS job opening at 10 a.m. NASDAQ and S&P took kind of a aggressive move. They look like they want to trend higher on the day. The S&P is currently sitting with some liquidity at 55.40. If it can squeeze through that, they probably both have a chance of continuing higher based on two time frame momentum. Gold, we called the low this morning on some high volume, and it's just kind of chopping around, but still holding that low we discussed. And crude here, we talked about this high, okay? So what transpired at this high? A couple things. Super high buying volume here. Going to talk about that. Also, aggressive buying here as well. So I want to look at this from a couple different angles, all right? At this level, we were having a hard time pushing above the candle at 8:40. Now, the 9 a.m. open candle did get aggressive. I'm going to show you guys the footprint chart in this video so you can see that the top two ticks of that specific candle contained all the buying delta, okay? While the rest of it here started to just eventually kind of fall back and not really offer anything that provided follow-through. Like, there was nothing here to say, all right, listen, we're going to continue higher. We identified key levels that if crude kept breaking, we would continue lower, right? So 84.16, 83.95, 83.65, point of control 83.45, and then this low here for the session 83.35-34 roughly at the moment. And then you can see we've now broken that, continue to be kind of pushing our way a little bit lower into some levels from the prior day, but whatever, right? Like, who cares? Identified it up here, and this is where it kind of rolled over. So let me show you on a short-term basis. This is what you see above here is a 4-hour chart. This is just showing me kind of the volume profile here for each daily session. You can see we've kind of pushed through that as well, and we're kind of heading maybe a little in deeper towards the high of this candle. This was kind of the next objective, 82.75. If we push through 83 bucks, that's still probably viable, right? You can see a little liquidity behind me, resting at 83 and 82.90, but that's probably where we head. So let's look at the short-term chart here. This is a 5-minute chart. You can see we had some strong buying on the 5-minute candle at 8:40. All right, so you can see that printed green with no follow-through, high volume radar dot there. And then the 9 o'clock candle, look at this monster like rat tail or wick, this body right on top, super high buying volume and no follow through. Like, we immediately failed. Like I said, in a second we'll look at the footprint chart. I'll show you why this candle didn't really allow for any genuine follow through. The top two ticks is where all of the buying delta was. Now, if I go to a 3-minute chart, looks a little bit different. Now, some of you are going to go, well, why do you switch between a 3-minute chart and a 5-minute chart? Well, because they look a little bit different, right? I'm always a big fan of looking at the market from as many angles as I possibly can, and I do that so that it allows me the opportunity to say, hey, if there's a discrepancy, I need to be really aware of what's transpiring here. So understanding a 3-minute captures price action within a 3-minute period, right? Starting at each hour. A 5-minute captures price action in a 5-minute period. So looking at the 3-minute, the 8:42 candle right here shows high selling volume, and then the 9 a.m. candle here shows high selling volume. So that shows you the 3-minute and the 5-minute are going to read differently, right? So I, as the trader, now have to say, all right, how am I going to make my decision process here? I have the 5-minute chart telling me that the buyers can't advance. I have the 3-minute chart telling me that there's a series of sellers here, aggressive sellers. I got a few wicks here. Now I got to make a decision. What am I going to do from here? So for me personally, I end up defaulting back to the 5-minute, which is what you see on this chart below. Okay? This is a 5-minute chart. I'm clearly seeing we're having we had a little excessive buying here with a pushback. I'm seeing it again here. So, at this point, what I end up doing is I just go to my footprint chart and go, all right, I need to now decide, does something here lead me to believe that we're not going to go higher? All right. So I'll drag this over here just for kind of visual purposes. What you have here is a footprint chart, okay? You can see here at the 840 candle, notice all the buyers are stuck on top, right? So aggressive buying on top, a delta of about 302, that's really strong, okay? And if I pull this back a little bit, you'll notice as the price was rallying there into that spot, all right, we had a delta of 14, 91, 103, 155, 230, 302. Notice the buying interest was increasing, okay? So the buying interest increase. We then have a delta of 302, all the buyers on top. We then have a net delta of 66, all the buyers on top, okay? Then we start getting some strong selling coming in, but notice the buyers are stuck on top. Right? Same thing here. We went from 302 delta to 66 to 66. Doesn't show me a super high interest in buyers wanting to drive the market higher. Then we get this opening candle here at 9 a.m. Now look at the volume. Over 4,700 contracts traded. We get a delta of 122. The entire delta, let me see if I can get it to show there. The entire delta is stuck in these top two ticks, 86 here, and there's like 42 here. So more than 122 is stuck in these top two ticks. We have 2,300. We have more than double the volume, yet we have a fraction of the delta, okay? So this delta here is less than half of the delta here, while the volume here is double the volume here. So what is that telling me? It tells me that the buyers here, these buyers that did have interest have all been absorbed, and the buyers are now losing interest. So this is where I want to get short, because there was a pretty good chance from here we would do what? Well, we would start selling off, right? What were we looking for? We were looking for a continued push. We sold off, we consolidated, we continued to sell off, we corrected, right? And we started bouncing off. We came back up. Notice all the buyers got trapped here. And then what happened? Well, we started selling off again, right? We hit a low, 83, what is that? 83.06. Maybe we come back. Maybe we push lower again. Irrelevant. I don't care at this point. I'm in and out of my trade. It doesn't really make a heck of a difference to me. What matters to me is, was I able to identify a reason to get short here? And I was, right? Like, we got stuck. We stalled out. We ran out of steam. I showed high buying with no follow through on the 5-minute. On the 3-minute, I show high selling, right? With no ability to push higher. So I'm left to say, all right, I have a reason to believe that the buyers are exhausted and the sellers are stepping in. With that reason to believe that, if I have the ability here to get short, I then am looking to take profit as the market comes down. Well, where are key levels to me? So I just marked off key levels on my chart here. So you can see very specifically 84.16, okay? Come in here to 83.95, come a little lower, 83.65, point of control, 83.45, the low of the session, 83.35. If we push through that, 83 bucks, barring liquidity along the way, if we can continue lower, the high of Friday's session is what I'm looking at as the next key support, and that's 82.72 if we start falling back in. Also, a line marked off here is 82.42, which is an area of higher time frame now considered support since we've broken above it. So you have to connect the dots. The market's going to always leave you clues, right? It's your job as the trader to go, okay, the market's told me this. I've been able to interpret it. can I now put an actionable plan around it, right? And some of you may go, Anthony, you just told me yesterday's video that, trading with the trend is going to always be the lowest risk. And it is. Trading with the trend is always the lowest risk, but I have a reversal trade plan. The reason I have that reversal trade plan is because eventually a trend comes to an end, and normally the correction could be very profitable, right? Once you've established a trend favoring trade plan, you'll then put together a reversal trade plan. You'll then put together a correction trade plan, right? You'll put together all these different approaches to the market. The market today, that was the approach that was offered, right? We were very consolidative here. Yes, we pushed higher, but it took a long time. It took a long time. And then when we did push higher, we didn't really go very far. So coming into the market here around 7 o'clock, the market was doing what? Nothing. It was just sitting here sideways. Yes, the bias was to the upside, but you can see we had a flat overnight. We come up, market sideways. We get a little push and very minimal follow through, right? From the push above 16, we ran as high as 38. Okay, we didn't go far. Notice from the failure of this high to this low, we made a pretty substantial move, right? Like 84.30 down here to 83 bucks. Like it's over 100 ticks. Which one do you want to trade with, right? When the market's running out of steam, you want to be looking, for me, I've developed a plan to take the opposite trade, like try to trade the correction. I didn't know if the market was going to get held up at 84.16 or it was going to get held up at 83.95 or if it was going to get stuck at 83.65 or 83.45 at point of control or the low of the session at 83.35. I didn't know, right? Nobody knows. You just say, all right, I've identified some key points in the market that I want to take profit at. Right? If I break 84.16, my analysis would conclude me to believe we'd push to 83.95. If we broke 83.95, my analysis would conclude me to believe we go to 83.65, 83.45, 83.35, so on and so forth. Okay, below that, 83 bucks. Below that, 82.75. Those were kind of the numbers I left my clients with as we wrapped up the session. Now, how did I trade it? Well, I started just taking my profit here. I closed the balance of my trade at the test of the session low, right? Because I saw we got some pushback here. Now, I also told my clients, hey, if we push back here into 83.60 and hold, we should take the lows. And we did, right? But I was already done. I was out. Right? I don't even know if I'm going to trade tomorrow. I doubt it. Thursday's 4th of July. Friday, even though the market's open, it's probably going to be a slow day. Maybe I'll sit at the computer. I'm not entirely sure. But the reality is, I achieved what I was after. I don't have to be greedy about it. I don't care that the market's still ticking around, and maybe I could have earned more. Right? I took a very calculated risk. Right? I got short up here. Where was I wrong? If the market pushed through the high, right? I took my profit here, 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 and then I closed the balance of my trade there. Why? Because that's what made sense to me, right? That doesn't mean it's what's going to make sense to you. So what do I provide for my clients? I provide the analysis, I provide the interpretation, I provide the expectation. Hey, we're getting jammed up here, okay? If we can no longer go higher, these are the levels we're going to push back towards, and as we break each of them, we could conclude that we would continue towards the next level, right? Whether they acted on that trade or not, that's up to them, right? I'm not here to dictate to anybody how to trade or manage their money. I'm simply here to read the market, share my experience in reading the market, and if that helps a trader make a decision that works for them based on their own personal trade plan, and they act upon it and they're profitable, wonderful, okay? But I'm certainly not here to say, this is what you have to do, okay? That's not the way this works, right? You're in control. You need to be in control of your emotions, your psychological aspects, you need to be ready and willing to employ your trade plan. Right? If the analysis happens to align with your trade plan and you believe that it works for you and the risk associated is for you and so on and so forth, great, do what you want. Right? But I'm here to simply say, hey, if crude can't go higher here, these are the levels I believe price could push towards. I believe also that if we pull back, which we did on 2 occasions here, 83.60 could hold price and could push the lows. It did, and now it's reversing. Okay. So I want to share this with you guys so you have some insight to the way I trade. Because if you decide that, hey, I want to trade with Anthony, I want you to know what you're going to get, which is analysis, interpretation, expectations on the NASDAQ, crude oil, S&P 500, and gold futures from 8 a.m. to 11 a.m. every single day. You can decide to act upon whatever it is that you choose. This is a free will community, right? Like there's nobody here telling you what to do, simply sharing with you the belief of what the market could offer, okay? So if you want to learn more about that, I'll leave a link below this video. I'll also leave my email. Feel free to reach out to me. Normally, I like to have a phone call first before a client gets involved. Make sure we're all on the same page because that's really the way that things seem to work out, okay? Folks who just come into the program blind without having that conversation, oh, I didn't know, and this and that, and they start asking questions later. Well, ask your questions first. Decide if it's right for you. You know, it's a month-to-month, commitment. You can start and stop as you please, but I want you to know what you're getting into before you get into it, all right? This is not a cheap sales pitch. I am here to be the best trader I can be, and in being the best trader I can be, I can provide the best analysis, interpretation, and expectation that my skill level allows me to be, along with teaching you lessons along the way, sharing with you the ins and outs of what has worked for me and what has failed for me. So if you enjoyed this video, please like it, all right? If you have questions, don't hesitate to reach out. I will see you in the next video. God bless. Have a beautiful day, and stay well.